Great. So welcome everyone. So we'll get going. So let me start maybe this session on open finance. And so I'd like to really get a pulse check maybe on who knows open finance and who's got any sort of indication of what it is. So if everyone would like answer this poll that's just popped up, and then a brief introduction to myself. So I'm working at Finantier, which is a company in the open finance domain. And prior to that, I worked in the payment space with Stripe, and then prior to that in like enterprise software, more like CRM, front office stuff, subscription billing type stuff, CPQ packages for those who know what that is. So we have 2 practitioners, 2 beginner's mind, 1 intermediate. Perfect. Let's get going then, and I'll try and position this content to cover all of the levels about open finance. So those of you who know something about it, please bear with me as I talk through some of the basics perhaps. So overall, what's open finance? It's, I guess, part of a larger movement around data portability and open data in a sense, or an open economy. People sometimes refer to this as well. And so it's based upon the premise that good things happen if you allow consumers to actually own their own data and to be able to use that data for their benefit. So rather than the data being locked up in silos, being locked up in, in this case, we're talking about financial data for open finance, being locked up perhaps in a bank or in the e-wallet company, that the consumers themselves can sort of get access to that data in a structured way, and with them knowing what scope they want to take around that data, but they can take it and share it with someone else and use that actually to unlock access for them to new financial services that may be coming from a fintech or from an existing legacy financial institution. So that's the premise around open finance. It's in different stages across different places in the world. So we'll talk about other places in the world a bit later in the presentation. We'll cover like a zoomed out global view before talking about Southeast Asia as well. But this is the basic premise, is that good things happen when you allow people to get access and manage their data for themselves on their behalf. So McKinsey did a study earlier this year. So like high level hand wavy numbers slide. This is your high level hand wavy slide here. So the GDP impact potential of open finance. And I think the only thing that I take away from this is that yes, there's an impact, and yes, you can measure it. And they'll look at that in different characteristics in terms of what does it actually unlock access to. And so 1.15% impact in developed markets like the US and Europe, and in more of a developing market like India, 4 to 5%. And let's say that's at least that high, if not higher, also in markets like Southeast Asia, where there's not been as much access really in a lot of Southeast Asian countries, particularly the developing markets in Southeast Asia, to just regular old finance, right? I mean, I think banking penetration in India is actually pretty good compared to many other markets in this part of the world in Southeast Asia, where I happen to sit. I sit in Singapore, and my company Finantier does a lot of work in the Philippines, in Indonesia, in Malaysia, and countries like that, where access to financial services is actually quite limited in many cases. And so overall, across the entire Asia Pacific region, there's quite a lot of a lack of access. And so one proxy metric we can look at that's commonly measured is the unbanked population in the Asia Pacific region. And so that's something that's relatively easy to measure. And so I think this data here comes from the World Bank and some studies that they do. They have a thing called the Findex, I think, which is where this is from. And so this is looking at how many people do not have access to a bank account across Asia Pacific. And so some fairly large numbers that you can see here. So 1.2 billion in total that simply do not have access to any sort of banking infrastructure. You can see high absolute numbers here in China and India, but in fact, as I mentioned for India recently, earlier in the call rather, and for China as well, those countries actually have relatively high banking penetration compared to some other geographies. Like if you look at banking penetration in places like Afghanistan or Pakistan, I think are really, really low. You're talking about maybe about 20% of the population actually have a bank account, so 80% do not. So it's quite different across the different regions in terms of access, but the total numbers in terms of the total, lack of opportunity for many of these people is really, really high. And it's also, I think, important to point out is that this measure, like the unbanked population, is what people will often talk about, but it's not really a great measure, to be honest, because these days a lot of the services that people used to rely on their bank for, you can actually get alternative services now by just having a really good e-wallet service or a really good e-money service or a really good remittance service powered by some fintech or what have you. And so like we really need to build some new measures here that would more look at access to financial services and what that unlocks for individuals rather than just do they have a bank account. But right now, this is the best measure that we have, and it speaks to a big lack in the market, really. There's a lot of underserved people out there that simply do not have access today to financial services. And as we go through, please don't hesitate to react, to ask questions. Feel free to use like the controls you'll see in this Butter application on the left, I believe, that you can like raise your hand if you have a question that you'd like to me to call on you for, or simply put the question in the chat if you're more comfortable writing. That works too. So zeroing in Indonesia, where we as Finantier actually spend a lot of our time. So this is looking a little bit more at the problem here. So this comes from 2017, so not perfectly up to date, but it's the latest I could find with some good data. And it's looking at measuring the gap really in services across payments and transfers, savings and credit. And so the gap is measured here. You can see it's really, really large for payments and transfers. So that's talking to the fact that a lot of people today who would like maybe to do payments in a different way or a digital way simply cannot do it today. If they'd like to transfer money to someone else, maybe do a remittance type business, they're not really seeing providers that meet that need. And so this is the largest gap, so measured 144 billion annually of payments and transfers volume. On the savings side, the gap is a little bit small, but still significant. So there's still 37 billion unmet savings need. This is basically money that it's not invested, that's not saved, that's not properly managed. And here you can, it's broken down in terms of the existing market needs being met across individual and micro and small and medium enterprises. And then lastly on credit, so a 57 billion gap in Indonesia for credit services. And this one is particularly significant, I think, because it really speaks to the inability of people to get good credit on good terms. And so even those who are being somewhat served for individuals and again, small enterprises, they're frequently not getting good offers, they're not getting a selection of offers, they're not getting good terms for the credit that they do get today. And so I think something like 77% of all loans in Indonesia are not coming through even authorized lenders. They tend to come from friends and family, and they tend to come also from loan sharks. And so a lot of the loaning and money that is being loaned to people is actually coming from reputable sources. And of course, a loan shark is not going to give you good terms, and repayment can come at the sharp end of a pointy stick sometimes. So that's not a position that we need people to be in. And so this last lack of access to credit and savings and payments and transfers basically means that people are not able to properly manage and grow their financial lives the way probably all of us are able to do, because we have access to financial services and we do have bank accounts and we got multiple wallet accounts that we're using, and we're able to do investment of our money, and we have financial literacy programs that are accessible to us. But for many people, this like 1.2 billion number that we mentioned earlier, we're talking about very large numbers of people for which this is not true, and they do not have access to these services. So open finance is one way to address this, to try and get at starting to solve this problem. So to illustrate this a little bit, I want to take an example here of Sustri in Indonesia, who is a delivery driver with Go. And let's say that they're doing business for Gojek, and so they do a food delivery, and that's maybe one of their principal, maybe not the only one, but maybe one of their principal sources of income. And so she's doing delivery and she's getting payouts, let's say to the GoPay wallet. So that's a transaction that's happening, that's providing part of the income for Sustri and that she's using as well for her family. She then does some shopping online and she's maybe paying out of that GoPay wallet. and paying through a payment processor like a Zendit, perhaps in Indonesia. And that money then is going to Lazada, which is the site that she's shopping on. So there's another like digital exhaust trail of financial information that's going through all of these different providers here. And then what gets delivered for that online shopping that she did from Lazada is being delivered, let's say, by Ninja Van for the delivery courier service for that last mile of the connection, delivering to Systri, which again requires that her address information and maybe it's details about the package and weight, etc., is also be transferred there. So all of this data is there today. And that data is something that today Systri does not get to leverage for herself. Yes, she can log into her GoPay account and she can see her transaction history. Yes, she can log on to Lazada and see all of the orders and the orders that have been done. And maybe she can log on to Ninja Van and see what has been delivered recently. But that's about it. It's like a one-to-one interaction with each of these systems. What is lacking is the ability for Systri to take this data and actually use it to get access to new financial services. And so those will typically be fintechs, let's say, who might like to serve Systri and might like to see if is Systri credit worthy for an underwriting process for giving a loan. And so as we learned about from Uttam, as we went through all of the presentations on the lending business, lending is a very data-driven business. And so a lender is not going to be able to lend to Systri unless she can prove that, yes, I have an income, here's how I spend my money, here's how I budget my money, here's what I'm looking to do in terms of my financial goals. And part of that is I need capital to actually do that loan, to buy that house, to pay for education for the children, to get a new motorbike for my delivery business, let's say. And so that's necessary to do. But right now, all of Systri's data is essentially locked up in these different silos. And so Systri does not have the ability to take this data and actually present it to the fintech in order to unlock access to these services. And the fintech is then also limited in terms of the market that they can serve, because if this client Systri walks into them and starts speaking to them, they're going to say, okay, well, I don't really know who you are, and you don't have bank statements that you can show me, and I'm used to seeing maybe bank statements, but you don't even maybe have a bank account, or there's not much activity on your bank account that I can see. So therefore, I'm sorry, but I can't serve you. So actually, they're also limiting their market that they can address. They could potentially expand into this 1.2 billion across Southeast, across all of Asia, rather, but they don't have the ability to do so because they don't have access to the data. So this is something that Open Finance, therefore, is trying to look at and trying to solve. And so we'll get into the details of some of how it works right away, and what does it look like, and what does it feel like to a consumer, and what is the actual data flow. But fundamentally, at the high level, let's say, it's all about saying that consumers should be able to do this data portability type thing, where they can take data from where it currently lives, and with their consent and with their authorization, bring it to some new provider of financial services. And then that provider of financial services will use that data in order to know more about the consumer, to validate their identity, to look at their income verification, to choose whether or not to give them a loan, to give them financial advice. We'll walk through a little bit later all these different use cases that you can use with Open Finance data. But the very origin, it's consumers are in control, right? They have to trust this data flow. They have to trust the data sharing. They have to make sure that their data, highly confidential data, is kept private and will not leak and is highly secure through this transfer mechanism. They have to have control over that data sharing. They have to be able to stop it whenever they want to. They have to be able to adjust the parameters around it. So how much data for how long, etc. How deep does the data sharing go? That also has to be under control of the consumers. And everyone in this ecosystem has to sort of play that game, has to buy into the fact that it's consent-based, that they need to have very, very high rigor around data controls and privacy controls, and maintain the security. So if you have that in place, then this ecosystem can actually work. So some of the flow here, if we walk through 1, 2, 3, 4, 5, is it starts with the consumer looking to access some new financial service, and they're the ones who have to initiate that data sharing request, essentially. So they'll be working with a new financial service, they'll be logging on, they'll be onboarding to that service, and then the service will say, hey, to know more about you, I would like you to share your financial data with me. And then they have to choose, okay, I have a bank account, or I have an e-wallet service, or I've been doing shopping on some shopping site. I want to give you access to that data. Then, so they essentially, with that third-party site, will create this sort of data sharing request, if you will, that needs to get sent to the actual institution, so the bank or the e-wallet or the e-commerce site where their data actually resides. And then the typical open finance way of doing this is that that service is going to do authentication directly to the consumer, right? And so they're basically receiving this data sharing request. They authenticate because they're the ones who actually know and have this strong authentication mechanism with the end consumer. So that that allows them to validate this request is valid, that it's really coming from this consumer. The consumer knows what they're consenting to. And then once that request is authenticated, then the data can flow, right? And then it can flow directly to the institution or through like an infrastructure provider or an aggregator of open finance services. We'll talk about that business model a little bit later. But then the data can start flowing, and then the financial or the fintech who's offering the service in this scenario can then start providing the service based upon that data back to the consumer. So the key things here that's important, I think, to look at is that, number one, you always have the consumer in control of this flow. They have to be informed about what's going on. So there has to be a level of informed consent here. And so that's an important point. And then also that the actual authentication flow for each individual data source that they're unlocking is secured and authenticated by that data source themselves. So this is, for those who are like in the security world, this is a distributed authentication method. So lying behind this, you have protocols like OAuth that is very important in this to allow this to happen in a very distributed way. We won't get into the technical details on this call, but there's a lot of infrastructure that allows this to happen, which is now available, I think, fairly well battle tested on the market, and it continues to evolve, particularly for these financial type scenarios. And so that's what works behind the scenes to make all of this work. So let's look at an example consumer experience for this. So let's say that, let's go back to our example of Sustri. And Sustri wants to get access to a loan service. And so Dompat Kilat, this is a fictitious example, so I'm using just example names here. But let's say that Sustri wants to access Dompat Kilat and say, hey, I'd like a loan to buy a new motorcycle so I can expand my deliveries and I can make a little bit of more money from me and my family. And so in approaching Dompat Kilat here online, what you can do is say, yes, Dompat Kilat would like access to my bank account data. And let's say she happens to, yes, have a bank account with Bank Finantier in Indonesia. So she would select that bank. Then there would be a sort of parameters here around the consent request. And this would be, first of all, like, why does Dompat Kilat need access? Let me confirm that's really actually a valid request. And then what do they want access to? Do they just need to see my account balance? Do they need to see the transaction history? If they need to see my transaction history, then how much? Like the last month, the last 3 months, the last year, like how much do they need to see? And then also, should they have ongoing access to my transaction history? So sometimes lenders, particularly for someone that they don't know, they've never given a loan to before, and someone that also is probably maybe not in the regular like credit bureau reporting services, they may want to have an ongoing access to that customer's account just to get like early warning signs that there might be a repayment risk, for example. So all these things ends up being somewhat of a negotiation between the individual and, in this case, the lender as to which data you want to share. Are you okay sharing that? Do you want to sort of move the cursor back a little bit or not? So this is how this would get set up. And there's a lot of work, I think, that needs to be done in the industry in general and also in regulatory schemes to make sure that the information that is presented here is actually understandable to the consumers and understandable to different types of consumers with different levels of financial literacy and different levels of, let's say, digital savvy, if you will. And so there's a lot of work actually happening in the industry about how to manage these different consumer experiences, how to localize them, how to make them work in different scenarios for different types of data sharing, and trying to make sure that you both optimize that people understand what they're agreeing to. So when they go on through a flow like this, that they really understand what type of data sharing arrangement they have just set up, They also understand how they can go back and edit that or completely, opt out of it and revoke that grant that they gave for the data sharing, revoke their consent, and then also that at the end of it, that they're happy with the data sharing that they've done, and they feel they've gotten sort of a good exchange of a fair trade. So they give data to this new fintech, and this new fintech is actually giving them good service. So that needs to be true. And then also, you don't want the information displayed here to be overly complex and like overly verbose. Like this particular example here, for me, is quite verbose, and I'd love to see it sort of shorter and more succinct, because you don't want people to be sort of turned off by having to read through pages of legalese. Because if that happens, then they're simply just going to not go through the process, and they'll abandon, they'll drop out of this process here, and then they will not get access, in this case, to a loan potentially, and the lender does not get access to a new potential customer for loans as well, which is how they make their money. And so a lot of work to be done here in the consumer experience. But next step is, if the client here, the customer, the end user, would be happy with this data sharing arrangement, then they proceed. Here's then when you have the authentication step that happens with the provider of the data. So in this case, it's their bank, Bank Mandiri. So they would log into their account. This happens entirely on the bank's website, and probably even in the bank's application or mobile app would be very, very common. They would again have to maybe set up parameters of the sharing here. So yes, I'm granting access to an account, but which account do I want to grant access to? Is it just mine? Maybe it's a joint account with a spouse. Which accounts I'm actually going to grant access to? And they sort of reconfirm some of the details around that consent, the data scope of the data consent. That's also visible here to the original data source, in this case, Bank Mandiri. If that's all okay, then they proceed, they confirm, and okay, now the data access is granted. And hopefully here you're also telling them how they can revoke at any time the access for future reference for that consumer. So that's what the consumer experience would look like. This is a relatively complex one. There are much simpler ones that can be done for things like payment transactions, for example. It's much simpler than this. I'll show an example of that a little bit later too. Any questions on that so far about what this experience looks like for open finance? Feel free to come off mute.
Fergus, just a question, right? So, so what is the incentive for Dompat Killa to share this information with a fintech company?
Or in this case, it's actually Bank Mandiri is doing the sharing, right, to Dompat Killa. But yeah, so two incentives. One incentive is that what we're seeing in speaking in the market to many providers on both sides of this equation, both the data holders, the people who are looking to consume data, is that it's not actually two sides to the equation. Like, everyone has data ultimately, and everyone would like to be able to leverage other people's data. So part of it, I think, is companies realizing that this ecosystem and this sharing of data can be beneficial for everyone overall, essentially can grow the pie for everyone, right? If this data sharing happens, you're able to expand the number of people through financial inclusion that can participate in financial services. And that's good. That tide lifts all boats. So there's a recognition of that, number one, which is you have to give some to get some. And so that's also spurring a lot of the companies here to actually start playing the game. The other thing that's happening here is that the regulators are across the world, in fact. Like, there's no central bank at all that's not considering some form of open finance. And they're doing it because, for two reasons primarily. They're doing it because they want to see more financial inclusion. So particularly in developed markets, a little bit less, but still, like even in the US, I think there's a lot of people who do not have access to bank accounts because the banks simply won't serve them, because that's a choice. Some other markets you have like a minimum service guarantee. Some other markets, even like the US, you don't have that. And so people, again, don't have access to good financial services, and they can't better their lives by getting better financial advice, or can't get loans, et cetera, et cetera. So that tends to be across markets. That's one of the drivers for the regulators to ask for open finance and sometimes require and mandate open finance. And the other reason that they want to do it as well is that they know there's a big potential burgeoning fintech industry that can be created that will drive economic growth in the country and provide more choice to consumers, and that many young fintechs will not be able to grow and will not be able to compete with larger institutions because the larger institutions have the data, and data is the lifeblood of a lot of these fintechs. And so allowing them access to, let's say, legacy data, allowing consumers to port that data into the fintech, allows those fintechs to grow better and allows consumer choice, essentially. And so a lot of the developed markets actually started with purely open banking because they wanted that to be a spur to competition. So to allow lots of neobanks to start, because in a neobank, yes, you want sort of all the deposit and current account activity, but ultimately you want to offer loans. And you can't offer loans until you have a good idea of the credit history. And the credit history is built upon looking at all the payment transactions and income transactions that are sitting in the account to actually do your credit scoring within the bank's models, right? And so a lot of that is based upon the fact that these big banks have like years worth of data on consumers, and your fintech or neobank doesn't. So how do you sort of level that playing field? Well, you allow people to actually bring their data across. And so there's those two reasons. So many of the players are actually seeing that it's in their interest to start sharing data because that will allow them to get data shared with them as well. And then the fast-moving ones will try and benefit from that wave and try and create their own innovative services on top of that data. And then the second is the regulator actually forcing them to actually get there.
Got it. Thanks, Fergus. Yeah, and the prompt for the question was more from a Singapore context. Like I was using an app here, and which was using Salt to pull data, and the app's name is Autumn. It's ACB's Autumn. So what happened is that it took a good 5 to 6 minutes for my data to be pulled from DBS Bank, and I actually checked with the fintech company. They said the bank is actually throttling the data request itself, and they are intentionally slowing it down. So I got curious that might be DBS doesn't have skin in this game, so that's the reason why they're trying to sort of stonewall. That's the reason why I was interested to know this.
That's interesting. Yeah. So and was that data like transactional data on the account, like payments in, payments out, like line by line in the account, or was it more like account balance data that was moving?
It was account balance data.
Okay, that's interesting because so Singapore, since like about a year ago, have a thing called SG Findex, which is like the Singapore version of Open Finance. It's only for account balances, so not transactional data. So it's like somehow a little bit less interesting than transactional data, but that's where they've started. So like all of the big banks, like the big 10 or so, I think are all contributing to this right now. But you're right, it's I wouldn't say why it's slow. I wouldn't want to like ding DBS on this necessarily, because it also like the technical infrastructure for this in Singapore is not that old, and it's still emerging, let's say. So I'm sure there's lots of things that could be improved in that. It's also a centralized infrastructure, and so it's managed by the MAS, so the regulator. They've actually set up that infrastructure where the data pooling actually happens. So yeah, I would expect that to get faster over time, but thanks for the feedback that it's slow right now.
Got it. Yeah. Sure. It's not about Finantier. It's about different providers, so it's okay.
Yeah. And again, this is not a Finantier pitch. I just happen to have our logo on every slide, so my apologies for that. You can move my image to the top right. You can hide the Finantier logo.
Okay. Thanks.
Okay, so let's talk maybe about some of the use cases that we see, and so how can you use like open finance data? How are people using it today? So we already talked about this one, the credit underwriting case. So for the end consumers or small business owners, it allows them access to credit without having a ton of data or traditional data to back it up. So if they don't have lots of transactions on a bank account, or if they don't even have a bank account, it allows them to get that access. It could also be that they do most of their financial services through wallets, both for even businesses, right? Will transact a lot through wallets to get money in and to pay suppliers and to do transfers to others, or transfer delivery drivers or what have you. And all of that is not really often in a form today that can be shared with someone, or certainly not shared with a traditional credit company or a lending company who expects to see like a bank statement, and they know how to interpret that. They know how to look at balance information. They know how to identify transactions on that. But if you present them like with Nia Wallet, print out from your mobile app, it's like, even how do you do that? It can be rather difficult to do. They're not going to be able to use that data. So one major aspect is that it's allowing a consumer to share data in an easier way with these lenders, and then through that unlock access to more lenders, and more lenders means more competition, which drives down the loan rates for the consumer, so they can get actually a better deal when they do get a loan. And then the other point, of course, is that a lot of this data can flow in a lot faster than it typically would. And so if you can imagine a credit underwriting process that is oftentimes paper-based. So you're like printing stuff out, you're bringing it into the lender's office or the agent of the lender's office in some rural community. And so it takes you time to actually get stuff printed out, because like, who's got a printer anymore in their house? No one, because they break all the time. And so you're having to get stuff printed out and then actually bring it in. And it's pretty hard to do. And so with open finance, your data can flow a little bit faster. Maybe it's not completely real time, but like within maybe a few minutes, you can actually have data move from point A to point B. And that then allows the lender to make a quicker decision, which for the consumer means they can move through the process faster. They can compare loans quicker. And so for people who are in the lending business, they're really interested in open finance because it brings them new data that they didn't have before. So it allows them to improve basically their scoring models, their evaluation models, their underwriting models. Again, they thrive on data, as Uttam told us in all of the B2B and the B2C lending courses. And that allows them to basically then tailor their offers a little bit better, even finer grained to these different user segments, and particularly for like the underserved, those without access to financial services, this whole new market space that they can now access. Also, open finance also unlocks low-cost payments. We'll talk about that a little bit later. And so that people in the credit underwriting business, of course, it's also a payments-intensive business. You're both dispersing your initial capital loan amount when you grant a loan, and then you're trying to automate the collection and the repayments of that amount in a very, very reliable way. And then the last point as well is, if you remember earlier, I talked about that you can grant a scope sometimes of a data access or data sharing. The consumer can decide to give ongoing access to their accounts. And if they grant that ongoing access, that data can also be used by a lending company to do ongoing monitoring of their loan portfolio. So they can start to get maybe early warning signals about this individual I gave a loan to is starting to be maybe in a little bit of financial distress, or they've actually taken on multiple loans in parallel after the loan that I granted, or they're starting to have repayment problems with other loans, or they have some major event happened in their life and they had to pay a major medical bill. And that then allows them to basically adjust their collection strategy. So not go to all consumers with the same sort of collection strategy and escalation trying to get repayment of the loans, but maybe then for consumers who have some genuine emergency, they can work with them to change the terms of the loan, change the repayment periods. They can adjust how they're trying to collect the repayments for that loan, or reschedule the loan, etc., etc. Another very common use case that we see is in personal finance management, and this applies all the way from giving people who've never maybe saved money in the past or never had the ability to do so, giving them advice as to how to get started, how to think about saving for a goal, how to do budgeting of their money, how to optimize their spending, find areas of their spending that they can maybe reduce so they can start saving a little bit more towards some financial goal, or like do retirement savings for those who have disposable income in order to do that. And so the lifeblood of any personal finance management tool is data, and consolidated data for how you are actually spending your money. So get data from your different accounts, from your wallets, from your remittance flows, from your bank accounts, if you have a bank account, to consolidate all of that, and then also do a level of, let's say, tagging on it. So identifying this particular merchant that you spent money on is named Starbucks, and therefore is a food and beverage in a coffee category or whatever it might be, and then use that also then to do the analytics you can present to your consumer, to let them know how they're spending their money and where are the areas in which they might be able to optimize their spend. And so this then again can be based upon the automated flow of data, which is what the PFM personal finance management companies are interested in. they're able to get that easy access. And the other thing that I think that's interesting as well is many of these companies don't want to just give you advice, but they want to start actually taking action on your behalf. And that action can be, hey, we've noticed that you have some spare money left over. You spent a little bit less on maybe food and beverage and restaurants or entertainment and dining out over the past month. Do you want to take that excess and actually put it away in a savings account? You click yes, and then automatically they're able to instruct with maybe your bank to move money from account A to account B, where account B is maybe an investment account. And so for them to be able to make those instructions directly into your bank account as an independent app, Open Finance can also solve for that. Another common use case, which is actually one of the major ones that was driving open banking in the UK, in fact, was overdraft protection. So the ability for an external PFM app to notice that you're likely to be in overdraft. So they're maybe observing your recurring subscriptions or recurring transactions and what's the timing of maybe your wages coming in. And they're realizing that actually there's going to be this 2-3 day period at the end of the month that one of your accounts is going to be overdrawn. And banks in the UK are notorious for having, ridiculous, in fact, it's true across Europe, notoriously for having rather high overdraft fees and a lack of overdraft protection on many accounts, and very poor and confusing communication to many of their customers about how overdrafts actually work. So I remember once I was working with a bank in France, and they would have an overdraft fee, of course, charging a percentage charge for the amount you were overdrawn, but also they charge you a fee for when you got into an overdraft position, and when you got out of an overdraft position had a fee as well. So you actually get hit with 3 different fees every single overdraft, and that was in the way for the bank of making money, and it was completely legal because it was specified in small print in their terms and conditions, which I had never read. And so personal finance management apps want that ability to basically say, we think you're going to get an overdraft in a couple of days. I'm going to automatically move money from your savings account into your current account so that overdraft condition never happens. I'm going to save you a little bit of hassle. And then when your salary actually does arrive on the end of the month, I'm going to move that money back into your savings account. So you can automatically set up those types of rules with the PFM company if, number one, they have access to your bank account to see the data, and number two, they have access to actually give instructions for money movement across your accounts, or even from one bank to another. Another very common use case is for onboarding. So like any fintech has to do a good job on onboarding for AML compliance and for just basically good business. And so a common use case that we see there is knowing that many of these other providers, like these data providers that we're talking about, a bank, or it could be a telco, in many jurisdictions do fairly strong KYC and KYB already. So many of these different data providers have already done KYC and KYB. They've already checked identity documents. You may have had to actually go in physically and show up. They might have done selfie checks online. They might have whatever process they have. They have a fairly strong mapping of your identity, like maybe your bank account number, plus your login details, tied to an actual strong notion of who that consumer actually is. And so again, through Open Finance, you can leverage that, right? So if you want to test that this individual does have a bank account, or does have a wallet account, or does have a mobile phone account in which strong KYC or KYB has been done, then allow me through Open Finance, just test, does that account exist and is it valid? And does it actually map to these identifiers for the individual? Does it map to their name? Maybe it maps to their national ID number as well. And so you can basically confirm that the person in front of you is the same as the person who went through this process at this other provider, at the bank or at the telco, and then use that basically as a really good proxy, or a very high value proxy for the identity of that individual. So it's a different way of doing identity management, which is basically relying on the credentials that have already been checked elsewhere, and then cross-referencing those checks. So do they have multiple telephone numbers? Are those telephone numbers mapped to address? Does the address also appear in the bank statement? And so you can basically build up this confidence level in the identity of the person that's coming in the door. And again, doing all of that digitally, doing it at relatively high speed, not real time, but close to real time, that again has massive value for anyone who's looking to onboard consumers. And then the last point here on the slide is also verifying income. So part of verification is not just identity verification, but also something like income verification. particularly useful again for credit underwriting. So seeing is the consumer is maybe claiming that they have a certain amount of income, you can check that very rapidly. You've access to their accounts. That's also useful, I guess, for when you're looking to categorize individuals. Maybe they're applying for a wealth management service, and many wealth management services will position on particular levels of income or particular levels of assets. And so if the individual grants access to their accounts where they already have holdings, you can verify whether what they say is true. And therefore, yes, they are maybe an accredited investor with more than, X 100,000 of invested assets. That can be useful as well as part of an onboarding process. On payments, so this is a very interesting one. So there's a lot of innovation, of course, happening in payments. There is an open finance flavor of payments too, which we see emerging in different places in the world. So I'd like to compare here payments across multiple criteria. So we'll start here with the user experience, not just chosen two to compare to open finance. Open finance is over here on the right. It's called account to account frequently in terms of a payment mechanism. And we'll compare against the bank transfers. So I'm choosing that because it's very common. It's the most common payment method, in fact, in Indonesia, or cards like credit cards, debit cards. And so bank transfers, for those who are not familiar with that, the way it works today, like sort of state of the art in Indonesia, is you're on a merchant's website, you're checking out, you're buying something. Here I'm paying like 1.5 million rupiah. And what happens is you don't actually get to complete that transaction on the merchant's website. What you get is essentially a bank account number, and you have to go and send money to that bank account number. So in order to accomplish that, you either go into your mobile banking app, and then you sort of copy and paste in this account number, and you copy and paste in the amount here, 1.5 million rupiah, press send, and you send that transaction, and hopefully your bank will complete that within a relatively short period of time. The money will arrive in the merchant's account. They'll realize the money has arrived, and now they'll start the rest of the processing of the checkout process and confirm the order to you, and then start delivering your goods. Or many times people will also do that through an ATM. And so in Indonesia, people will take this information, they'll print it out or have it on their phone, they'll go to an ATM, and they'll instruct that movement of funds on the ATM machine. So different ways in which people can do that transfer. The problem is, of course, that it's not in line on the commerce website. So the fall off and the drop off here can be quite large, because the time it takes someone to actually switch apps, or even like get up out of their chair and go down to the local ATM to do the transfer, those are all opportunities that the merchant may lose the sale. The person may reconsider, they may forget, they may look at someone else's website in the meantime. That conversions can be, have a pretty dramatic drop off at that point, simply due to the user experience of having to figure out how to send someone money. So even though it's very common, the user experience is not great. Cards, I think all of us has probably paid with cards online. We know what that process is like. There's all sorts of like autofill mechanisms that exist, or save your card with the merchant type mechanisms that exist to try and make that better. Authentication requires frequently a multi-factor authentication in many jurisdictions these days, with one-time passwords being sent back and forth, or validation in your bank's app that has that card, so the issuing bank for your card. But it's not an ideal process. It was, banks, cards were invented for offline processing, and now we're using them online, and we try to make it as good as we can, but still there can be holes in that process. The open finance process is a different process, and it works for a fairly large segment of payments can use open finance account to account. The user experience can be at least as good as cards, because it's happening in line. You're not having to go to an ATM, let's say. You're not having to instruct movement of funds. It's sort of in the flow of what you're working with. And this is one example of how it can work, where you're scanning a QR code for that payment, and then once you scan that and you approve it in your mobile banking, then the money movement happens immediately. So it's somewhat similar, if you will, to a bank transfers, but the difference here is that the money movement is not actually going through a payment gateway, as it oftentimes does with bank transfers. It's actually going direct from the client's account to the merchant's account. And all of the countries, particularly the countries in Asia, are all moving to this QR code based scheme in order to identify the destination for that account. And some are also moving to, like in India, you can have basically any sort of identifier that you want for your account. So you're simply sending money as easy as texting someone. That's also coming, I think, to a lot of Southeast Asian countries are adopting that same sort of model where you simply have an ID, a mobile telephone number, an email address, a moniker, essentially, that you can use to send money. So I think more and more this transfer mechanism is moving to this type of user experience. And then comparing for maybe more some of the back end of how this is working. So we talked about the user experience here. The cost is also an important thing to bear in mind. So on bank transfers, and here again, I'm talking about maybe Indonesia specifically, the consumer pays for that bank transfer. So they're paying the equivalent of, 30 cents, 70 cents, 15 cents, depending on the type of transfer in the bank and the method they're using, and is it real time or not. But the consumer ends up footing the bill for that transfer. So if you're paying, an example, 1,500 rupiah, you're also paying maybe 2,000, maybe 6,000 rupiah just to pay for the cost of the transfer. And the consumer is bearing that cost sometimes. So if you're transferring to someone that's in the same bank as you, maybe you're not paying anything. If you're paying into a different bank, then maybe you are paying something, which is also incredibly confusing for the consumer to know when they're paying and when they're not paying. So that's how bank transfers work. In cards, the merchant pays. So the merchant is paying their merchant fees for collecting the card payment. And so this, again, if a particular merchant is offering both bank transfers and cards, then how are you being equitable across these two payment methods? Merchants can solve it potentially by saying, well, if it's a bank transfer, I'll give you a slight discount on the price because I know that you're paying the transaction, and me as a merchant, I'm not paying much, if anything. Although the merchant may have to pay a little bit for bank transfers as well on the way in, but frequently most of the cost is borne by the consumer. In open finance and account to account, what we're seeing is that most of the central banks are trying to invent these new open finance payments. And in doing so, one of the major things they're looking to achieve is actually drive the cost of payments close to zero. So in an ideal world, bank account to bank account movements should be zero. So, I came from the payments industry. I think there's a general understanding in the payment space that the payment transaction itself shouldn't really have a high cost. You can add tons of other services around about, fraud management or helping a better checkout process and optimizing that you can definitely legitimately charge money for. But the cost of payments itself may well end up going to zero, particularly because a lot of the regulators want that to be true. And they believe that, just moving money on a ledger from point A to point B, existing ledgers or new blockchain ledgers, that shouldn't really be an expensive transaction. And you shouldn't be making, no one should be making money on that transaction. It's what you can add outside of that transaction is where you should be making your money. So part of this in opening up open finance, these direct account to account transactions and this very, very good consumer UX is trying to get those transactions actually going to a zero cost over time. I won't go through all of these. As I mentioned, one of the big differences, which hits both funds flow and reconciliation, is the fact that in the open finance world, you can have these transactions going, as I mentioned, directly from the consumer's account to the merchant's account, and that happening in real time. Right? We're talking like seconds, right, for that money to actually move. And so that means that it's very, very different from, let's say, credit cards and card processing times, because in cards, the money actually moves multiple places. And it goes through like the network, like a Visa or a MasterCard or American Express. It goes through the payment gateway, and then eventually it gets paid out to the consumer's bank account. And that settlement time can be long. Like in some countries like Brazil, the market standard settlement time for some types of cards is actually 30 days. And so a merchant does a transaction today, they have to ship goods to the customer today, but they're not actually getting the actual cash in for that transaction until 30 days later. Many places in Southeast Asia, it's like 4 days. Other places, like the best you can get in many of these instances are maybe 1 day, 2 days, or like end of business day is maybe the closest you can get it. But in open finance, again, you're relying on real-time rails, bank account to bank account, and those increasingly are becoming instant, like real-time, couple of seconds to actually move the money across. So that's payments. Any questions on payments?
Focus, you can ask. The third column is quite interesting. So, do you think then embedded finance is an extension of open finance? Is it a subset of it, or is it going to be the future state?
Yeah, you can definitely power a lot of embedded finance scenarios with open finance tooling, if you will. I think it definitely, if you think about, yeah, so for me, embedded finance is all about, I am a company who's got sort of an existing app service. So typically it's maybe B2B SaaS. Can you still hear me okay? I'm wondering if things are frozen.
Yep.
Okay, cool. Yeah, so in embedding those services into your app and bringing those services to your existing audience, then yeah, you can bring open finance services, and that can be open finance payments. It can be open finance powered credit underwriting. It can be open finance powered like just data aggregation, like for the personal finance management use case. And I'll talk through some of those for like more of an embedded finance and B2B use case as well. But yeah, definitely that makes sense.
Got it. Thanks, Fergus.
Account opening is another one. So we also see a lot of the open finance schemes actually also have like open finance style APIs for account opening.
Yep, got it. Yeah, specifically in so currently in Singlife we use Railsbank, and they actually position themselves as an embedded service or embedded finance platform, and they actually don't use open finance as a terminology. So just curious on how the players sort of brand themselves and create their own niches.
Yep. Yeah. And definitely there's no like hard definition of open finance. I mean, ultimately open finance is something that it should never really be consumer visible, right? It's not something I think that you have to educate consumers about data sharing. So that's definitely something that's true. They should understand a concept that, yes, I'm actually sharing my data from here to there. That's important, I think, to get as a concept. Open finance, of course, should disappear. And then, yeah, players in the industry, like more behind the scenes or in a B2B world before you get to B2B2C. Then, yeah, we see lots of players, talking about different things. I think we have seen a lot of ramp up in terms of people who are doing things that are, adjacent to this space are starting to talk about branding themselves or talking about use cases for what they do as open finance, because it's sort of a hot space, I guess. And you can get better, SEO and SEM marketing by talking about this space. So the more the merrier, we say.
Yeah, it sounds good.
Thanks. So let's talk about that B2B style use case. So here the example is I'm maybe offering, like here on the left hand side, you can see like an accounting package software, maybe to micro and small enterprises, maybe to small little warungs in Indonesia or sari-saris in the Philippines. And so I'm offering them accounting, I'm offering them maybe some supply chain management, maybe collective group buying for goods and services, those types of services. And so one of the things that they can do to, this is some part of an embedded finance scenario, is to say, let me also have access to your bank accounts, to your e-wallet accounts for the business owner and for the business accounts or the individual accounts if it's a really small business. And let me sort of pull in the data from your banking statements and use that to present you with a view for how you're spending your money, right? So back to what we talked about, I can tag transactions, I can give you insight into your spending and where you're spending money. I can do that as well based on your B2B transactions. I can categorize them as, if it's a software type company, how much you're spending with AWS plus Google consolidated into like a cloud infrastructure spending bucket, like that type of analysis for you and show you how you're spending money over time. Allow that then to drive things like spending controls, right? Like a lot of companies are doing B2B spending cards and spend management. That also requires a level of visibility into the actual categories in which you're spending money. So you can then parse that out and give like authorization levels on different cards, et cetera, et cetera. So a lot of that can be driven by an open finance type scenario. It also means that you can offer to your customers on this platform, you can now do things like automatic reconciliation. So a lot of accountants spend a lot of time saying, okay, I have these bills coming in that I'm instructing payments through maybe bank transfers or credit cards or what have you. I'm also raising bills or invoices with my customers, and I'm waiting to see if those get paid. And so sometimes, accountants or interns in the accounting department will spend a lot of their days sort of trolling through the different bank accounts or wallet services and figuring out, did I actually receive the payment, or did I actually send the payment out from my account successfully? And so that can be automated as well through open finance data. You're continuously scanning the individual's bank account. You're matching that up with the data in the accounting system, and you can automatically put the little check, transaction reconciled, no problem, amounts matched. And then if something goes wrong, the amounts weren't the same, or you raised an invoice for X amount and the customer paid a slightly different amount because they keyed it in wrong, then again, you can manage by exception rather than looking at every single transaction. So that type of reconciliation process, I think, can be quite valuable. A lot of accounting software packages are looking to get that through open finance, access to data, bank accounts and wallets, etc. Another good example as well is back to capital or bank account opening. You can see the little pop-ups here in the screen on the left, where this company is now using the data that they see through their accounting system, plus the data they can have access to by people sharing their account access and sharing the detailed data on their accounts, and use that to form a better picture of the credit worthiness of the individual, and then realize that, yes, I'm actually willing to offer you a loan to help with your expansion of your business. Here's the loan, here's the terms of the loan, would you like to accept the offer? So that type of embedded lending is quite possible in these types of scenarios as well. And then lastly, you can do bank account opening. So maybe this is not a small warring or a sorry, but maybe a more ambitious business, and they want to expand from one country and they want to move into the Philippines. They don't maybe have great presence yet in the Philippines, but maybe they have a limited or a minimal presence that would allow them to open a bank account. Let's do it digitally for you. I already know all of your data. I know you're a good customer because I can also vouch for you because I've maybe already done a strong KYC check. Let me use that to actually open up an account for you on demand and supply all the data automatically across an open finance API and get your bank account opened. So that's another good example of a use case in the B2B space. Any questions on those? And I'll move on. And the last one that I think that I'll mention is one that comes from the UK, where open banking has been around for a few years now, and it's one in which it's a nice use case. So it's around charitable giving, and what it does is, as a consumer, you give the Sustainably app access to your bank account in this case, or your multiple bank accounts. They then will look at your bank account on a regular basis. They'll see transactions in certain categories. So again, using this categorization of transactions. And for certain types of transactions like grocery or fashion, or I guess the categories that you choose, they will actually round up that transaction. So if you paid, £4.50 in the UK for a coffee, they will actually round up 50 cents and give that 50 cents to a charity of your choosing. So they'll accumulate that money in a bucket, and after it reaches a certain amount, then they'll pay it out to the charity. So this is leveraging both open finance for the data access and also open finance potentially for the payments. I'm not sure Sustainably use it for the payments, but theoretically you could easily do that as well. And this is a nice scenario because it's replacing essentially maybe like the tip jar that would have sat on the counter, maybe at the coffee shop, where you say, your excess change, you just basically slip into the tip jar for, giving to the lifeboat charity, rescue, whatever it might be. And rather than doing that now, you're paying digitally. You might be doing an Apple Pay type transaction or a Google Pay type transaction to check out. So that's become digital. So you no longer have as much change in your pocket. So you're not able to put it in the tip jar. When you're out in the high street, you're not able to put it in buckets that people are carrying around. And so this is a nice way to take some of that spend that used to end up in the pocket of a charity and doing good, that now you can actually leverage digital to have that same sort of round up, small value type contributions to charity in this digital way. So it's a pretty nice use case. And again, without open finance, this really could not have been done. So it's one that I particularly like. Okay, let's do another poll. So across those use cases, let me start a poll to see if you wouldn't mind answering. Which of those use cases, from credit to personal finance to onboarding to, you can choose multiple in this poll, which of those you think might be interesting to you in your business? Yeah, so onboarding, number one. I'm not surprised. That tends to be the one that everyone can leverage that pretty much, and everyone has an onboarding need, no matter what service or what sort of business that you're in. Yeah, so this correlates with what we working in open finance tend to see, that this is it's like a no-brainer. Let's do it. Yeah, and then payments, credit. Yeah, thanks for that feedback. Good. So not that much more to cover. I just wanted to define maybe terms here. So we will talk about open banking versus open finance. And the only difference really is in the data sources that you're covering. So open banking is sort of limited to just looking at banking data typically, which has big value, particularly in economies where banking is a major way in which people manage their money. But it's not the only place. And by expanding the number of places you can go to get data, you actually provide tons more value to consumers. And so I think I would expect that over the next few years, those places who started with open banking will move rapidly to open finance. We're already seeing that in Australia because they started in what they call the customer data right, which is the Australian form of open banking. And they're now expanding that to be telco data, utilities data, lots of really, really open data sharing. It's in fact beyond open finance. It's just like open economy, if you will. I'm not sure what they're going to brand that as because open data has already got different connotations. But it's definitely beyond banking. So really open banking versus open finance is just a question of the data sources that you are actually have participating in this scheme. So we talked a little bit about some of the motivations earlier, thanks to the question from Anto. So regulators, we talked about that before, what they why they're looking to do this. What they are doing though, and the role that they really, really need to play in this space. And we as a company, Finantier, who's operating this space, we really are encouraging them to play this role very, very strongly across Southeast Asia, where we operate, is that they need to set up a very clear governance framework, and there needs to be sort of good, it needs to be well-regulated industry because you are dealing with such sensitive data on behalf of the consumers and the business owners that are trusting this system and this ecosystem with their data. So it needs to be well-regulated. There needs to be sanctions when things go wrong. There needs to be fines or banning people from the system if they start leaking data in some egregious way, right? So that level of control, regulation, licensing needs to be in place, we believe. This ecosystem works properly. It also requires data privacy regulation, which unfortunately is not yet quite there in many economies, particularly what we look at in Southeast Asia. There's still many gaps there. Countries are getting there. They have projects for laws that hopefully will get there eventually, but we're not quite there yet. So that needs to continue. And then lastly, consumer education. I think the regulator has a role to play in that. Overall ecosystem probably plays a larger role just in terms of informing people at the point of contact with the services about how they can share their data and what the value they can get from it. But the regulator as well needs to set a tone for that and can do campaigns as well to help educate consumers about the benefit of this overall. So that's the regulator's point of view. Also, in general, what we see is that this never works when it's just from the regulator. There needs to be a groundswell of activity coming from the market, from fintechs wanting access to data, and the people who are holding the larger pockets of data realizing there's value in actually sharing that data. Because we haven't mentioned this yet, but sometimes these data flows can be monetized. So as a regulator will say, you have to share this type of data and you can't charge for it. So maybe you have to be able to share the account balance data, and maybe you have to be able to share up to 6 months or 12 months of account statement data, and that you cannot charge for when it leaves your premises, when on behalf of the consumer who wants to move it and share it. But there can be additional types of data or services that the provider can choose to charge for and set a market rate for. So it could be, like, for example, in the European scheme for open banking, there's a certain number of accesses per day that are for free, and if you access data more frequently or you access larger amounts of data, then that's a chargeable event. And so you can have a level here of a part that is maybe mandated and has to be called zero, but also a part that you can charge for. So you can actually make money as someone with a large store of data. You can monetize that data and allow consumers to bring it out. And hopefully the consumers are probably not paying the price for that data. It's the intermediary or the fintech that the data is moving to that is then paying for that data access. One of the things as well, I think, that is leading to open finance being better structured as an industry and having all of the APIs and infrastructure technically on the back end to make all of this happen, is that today, unfortunately, a lot of the state of the art is using screen scraping. And so a lot of providers will actually go and try and get data out of people's bank accounts by saying to the consumer, hey, please give me your login details, and I get to store your login and password details. Very, very secure. Don't worry, don't worry. And then I'll use that to actually log into the online banking website or like a simulacrum of the mobile banking and use that to actually go page by page by page and navigate through the various menus and actually start pulling out your account data and then using that to actually power an open finance type scenario. And so in some geographies, this is actually state of the art. This is how Plaid in the US built their business, was actually initially built upon screen scraping. And there was a cat and mouse game that typically then goes on where the banks realize this is happening. They're not necessarily very happy with it. And so they try and change their UI or identify IP addresses that are accessing them from people doing screen scraping and try and cut it off. But ultimately, I think what people are realizing is that the demand is there for this data sharing to happen. If it's happening over screen scraping, it's because there's some demand. And as a bank, if you want to profit from that, then build an API, make that proper, offer the API, and then charge for the API, unless the regulator tells you can only charge this much for the API. And so I think also the fragility of that screen scraping, the fact that it's a security nightmare because you're actually sharing your login credentials with some intermediary, that's led, I think, to also this momentum for change happening across the different markets. So this is a little bit of a view of the zoomed out view and some of the open finance schemes across the world. It's not exhaustive. There's probably about another half dozen at least that are not on this list, but this is some of the major ones that are happening. And so you can see sort of a timeline here from the top left with India, of course, with the India stack being very, very strong and first on the payment side, and now also this year in 2021 opening up account access in a regulated way from RBI, the central bank in Indonesia. The UK was one of the first to adopt what at that time was a European-wide scheme for account access and also payment initiation. So payments in open finance style. So that's the AIS is account data access and PIS is payment initiation services. So UK jumped on that a little bit earlier and a little bit more forcefully from the regulator compared to the rest of the EU. And then you go all the way down. So again, where I spend a lot of my time is in Southeast Asia, and you can see it's very active right now across the Philippines, across Indonesia. There's also stuff happening in Malaysia, but maybe a little bit later. So this sort of cuts off as to what we expect to go. These are all when do these things sort of go live is the dates that I have on here. But there's lots of discussions, as you can see, happening in many places that hopefully will lead to stuff going live next year. And when I say stuff, I'm talking about what the regulator needs to do, which is setting up a governance regime, having some view on data privacy or data privacy regulation coming pretty soon, and going all the way down to setting the technical API standards that are used to allow people to give their consent, have the data shared, have the data flow, and revoke access when required. So that requires a set of technical API standards that, in the best cases, these regulators are actually going all the way to doing as well. Any questions on that geographic view? Good. So let's look at one of those earlier schemes for, say, fullish open banking. that the UK did with both account access and payment initiation. And so that was launched in 2018. And so now 3 years later, they have, despite COVID, that slowed down a bunch of this stuff and slowed down a lot of the compliance by a lot of the data providers to like new emerging scenarios that they were trying to open up through open finance APIs. They now have about 120 sort of live products that are actually live and transacting with data flowing. So the products are like the consumer visible part of this. So do I see it? Do I get like personal finance services within my banking app or within a wealth management app? Do I get access to payments like the Sustainably app that we mentioned as well? Overall, the number of people in the UK who have actually used one of these scenarios is 9%. And so it's ramping up relatively quickly, but not outrageously so, right? It's not like dominant in the way that people interact with finance services, but it's going, let's say, relatively well for such a new type of technology and a new type of data sharing concept that had to be explained to consumers. And you can see the resulting level of like API calls that are happening in the background between all the data providers and the data sources and the consent management, etc. You can see how that's ramping up also. So that's an example of what a scheme limited open banking is able to do in an economy like the UK. And then on the ecosystem that we see emerging across these different geographies frequently looks a little bit like this. And so you have the national open finance frameworks that exist, and that's like what exists in Europe with this thing called PSD2 is their name for it. It exists in Australia with this customer data right that I mentioned. It's started to exist, and API specs have been published in Indonesia with something called BI Snap. And so these are the national frameworks that are mandated by the regulator, under which banks or banks plus wallets, plus e-commerce providers, plus payment providers are participating in this by sort of, if not regulatory mandate, by let's say sometimes very strong regulatory encouragement to actually participate in these schemes. So that's what's happening in the national frameworks. In parallel, you always have bank APIs. And so bank APIs will sometimes go beyond, as I mentioned, what's in the framework so that they can monetize different services, or they can offer up maybe their risk management tooling or their fraud management tooling and are doing it through APIs. That's not new. That's been going on for years. So all these existing APIs also exist, not just in banks, but wealth management companies, insurance companies, the whole financial space has this. And then finally, B2B SaaS API. So there's also like wells of data sitting within accounting packages, sitting within money transfer services for businesses. So there's all sorts of like B2B SaaS type scenarios, fintech and non-fintech, which also have data. So let's say this layer down here at the bottom is sort of the data provider layer. You'll have open finance infrastructure players, of which Finantier is one, is a player that sort of sits at this type of a level within this ecosystem or stack. And so the job of a player in the infrastructure layer is to understand and integrate with all of these different schemes that you see at the bottom. And so basically speak all this, soup of acronyms and all these different flavors of open finance APIs, be they regulated or non-regulated, be they mandated by the regulator or not, and sort of put all that together and present a more unified API to the consuming audience that you see here at the top. And so those can be the consumer fintechs or B2B fintechs. They could be the banks themselves or insurance companies or other existing financial institutions who want to leverage open finance and leverage access to all of these APIs and consolidate it in a single, simpler, let's say, API from the infrastructure player. Also, many of these infrastructure players are providing not just, let's say, data flow across a pipe, but oftentimes the consumers want something more. So it's don't just give me like raw transaction data, but in the examples that we gave, is do something like categorize those transactions, tell me what those transactions mean, do a process like income verification across multiple sources to give you a better gauge of like what income range this particular consumer or business might be sitting in. Do credit scoring. So many providers are doing credit scoring as well. So it's using these alternative data sources to come up with maybe a new flavor of credit scoring that can be done. And another thing that we see as well is that many of the infrastructure players sort of realize, like we definitely realize this, is that we have to be extremely vigilant about managing consumer data. So how we're building our risk infrastructure, how we build our stack is optimized for like zero trust approaches, both at the network level and the data management level, with everything very, very carefully vaulted and secured, and of course heavily encrypted end to end and at rest and all that good stuff. And so making sure that all that is done, so that whatever the data privacy legislation that emerges in all these different countries, that you're basically bulletproof, right? That you're doing a really, really good job about securing individuals' data, that it's not going to leak and it can't be abused, and no one sees what they shouldn't see within that infrastructure. And so that work to actually build that infrastructure is something that we see a lot of like clients, B2B clients at the top layer here, that they don't necessarily want to build that for open finance data. So given the granularity of that data, the fact that it's coming from a third-party source, that it may be coming through a regulatory regime that imposes particularly data privacy requirements, that maybe the fintech at the very top says, oh, I don't want to deal with that complexity. So basically give me sort of a browser-based access, give me UX on top of that data that I can check a credit score, that I can verify income for an individual, that I can see the categories of spending that they're spending on without having to see their actual transactional data, and certainly not get that transactional data into my data center, into my premise and under my control. Just basically abstract that away from me and give me like the value on top, maybe through a UX, rather than me having to build that entire data management stack myself, with the risk that I'll build it wrong and maybe will let data leak. So also, I think a lot of the infrastructure players are, playing that game where they're saying, I'm going to take care of that for you, and then give you a nice UX or maybe a simpler API, and you can consume some of that data without having to, manage to the regulatory requirement and compliance requirement that comes along with managing this very, very complex data. And then the last point I'll mention is, like, how many of these infrastructure players are there? So if you are a fintech, then who can you go to get this type of services? You'll see that I don't have numbers in the slide because my numbers are quite approximative, but let's say it's around 70-ish providers in Europe right now. So that legislation from the governments in Europe has existed now for a few years. As I mentioned, 2018 for the UK was one of the first to get that all the way defined. And so now you have like 70 startups emerged at the open finance infrastructure layer, or also companies that will help like banks comply with that standard. There's a bunch of different players there, about 70 of them in Europe. North America is around, I think, 20 or 30 right now. Latin America is smaller, as is Africa. There are more like maybe 10-ish type players in those geographies. And open finance is also emerging in all these places. And then in Asia, I think we're around maybe 24 or 30, perhaps, across Asia, with a large number, maybe 10-ish, a dozen or so in India. There's maybe another close to a dozen in Australia, because those markets also have been quite developed in open finance, either for payments or for account access. And then the remainder across Southeast Asia or China or Japan. So that's the state of the market. And with that, we're at the end of the presentation. So let me know if there's any final questions before we break for the weekend. And if not, please, if you wouldn't mind answering this poll. This one is anonymous, so let it rip. Great. I think we can then end the session for today. So I wish everyone a great weekend, and enjoy the world of FinTech PM. And I'll see you soon on the next session, which I guess is going to be next year now. I think after this, we go for a break for a while.
All right. Thank you.
Thanks, Fergus.
Thank you.
Thank you.
Bye-bye, everyone.
Bye.
Take care.